Welcome to Annette on Life, Liberty, and Happiness, a podcast where we talk about the Constitution, history, politics, the culture, and whatever else I feel like talking about. This podcast can be found on AnnetteTalks.com, iTunes, Stitcher, Spotify, YouTube, yada, yada, yada. And if you're only listening and you want to see what we look like, go to YouTube and find the video. Please subscribe on AnnetteTalks.com and YouTube and subscribe, all those other things you can do. So if you're watching, you can see that I am joined today by a guest. This is Jimmy. It's Sengenberger.
Sengenberger, yeah. There you go. It's a tricky one, but it's a fun one. All right.
I was practicing earlier, and I thought...
I appreciate that, you know. It is one of those where the biggest thing that throws people off is how do you spell Sengenberger?
Sengenberger.
But it's all E's all the time. There's no A, there's no I, there's no U in Sengenberger. Once you know that, Sengenberger is easy.
Yes. And I can tell just by talking to you that you're a radio guy.
Just a little bit, yeah. Only for almost 12 years. Yeah.
Right. Which is remarkable since you're, what, 28?
29.
29. Oh, you've had a birthday since I read your bio. Okay. Awesome. You're a young guy, millennial.
Yep.
All right. Millennials always make me a little nervous because I'm old enough to be your mother. Not that there's anything wrong with that. It's just kind of funny. All right, so you are the chairman and CEO of the Liberty Day Institute?
Yes, which is a program called the Millennial Policy Center, a think tank that's focused on engaging with the millennial generation substantively on issues of the day, which is what brings us here for a conversation today on student loans.
We're going to be talking about why college is so expensive and what we can do about it and student loan debt and all that. So, but you're you write policy that's geared towards millennials, right? And then do you try and influence policymakers with this? Or?
A little bit. We provide our research to policymakers that might be of interest or that might find it interesting to look at. We're not a lobbying organization or anything. We're a C3 nonprofit, so it's purely an educational effort. But we really delve in deeper into the issues and try to get underneath the hood and figure out what needs to be done in order to solve the problems facing the country today and then present some ideas and solutions.
Awesome. And do you engage with people younger than millennial as well?
Yeah, though there's a little bit with the Generation Z, especially older Generation Z, that there's a border on the millennial generation. We define it at Millennial Policy Center, the millennials, as being 1981 to 1997 or 98.
Oh, okay.
The disagreement is more on where it ends than where it begins. Most demographers and Pew Research and others will say that the millennial generation begins 1981. There are some who quibble with that, but they're wrong. The difference is that can be, I think, more legitimate is where the millennial generation ends. So mid-90s to late 90s is probably a good ending point for
So how long are you... So, all right, I was going to go into further of that, but I don't think we need to. But you're also on the radio here in Denver, KNUS?
Yes, 710. Yeah.
And when are you on?
Oh, thanks for asking. Saturday nights from 5 to 8 p.m. Mountain Time.
All right. And you also can be found at millennialpolicycenter.org.
Yes, which is where, as we talk about the higher ed and student loan issue, everybody can check out research I've done, videos, a lot of work on this topic on millennialpolicycenter.org, particularly under the issues and ideas tab on our menu on the website.
All right. Yeah, I've seen those videos. They're kind of fun. Like The Walking Dead.
Yeah, The Walking Dead's one of them. We've got a few different other ones. We just came out with one that's got Bill O'Goods and Freddie May conspiring at a bar on how to take over the student loan system for the federal government, which is one of the big reasons why the cost of college is so high and why student loan debt is astronomical at $1.6 trillion today.
Yeah, it's crazy. We were talking beforehand, and I was saying that I graduated from my undergrad degree in 92, and I think my student loan debt was like $11,000. And at the time seemed like a lot.
At the time it was a lot,
actually. But I was able to pay it off fairly quickly, but I look at the numbers today and a lot higher.
Yeah, the average borrower graduates with nearly $40,000 in student debt. Now, it's less than half of Americans in college who have to take out student loans, so that's at least nice-ish, I guess. Yeah. But for those that do, they're taking out a sizable sum. I myself still have about $15,000 in student loan debt outstanding. It just seems like it never goes down because of the interest payments.
Yes, it feels like I'm going to die with it. From my law school debt. That's completely
different. Sure.
If you're a lawyer or a doctor, it's just you might expect
It
that
is
to
a different story.
die with you, but so you mentioned that one of the reasons why because college has gotten ridiculous. Like I hear the numbers that people are paying to go to school right now, and I think, how is that even possible? That's insane. And so I've been thinking a lot about why is that? Because it wasn't the case. I mean, I went to a state university, and I went to a community college first, like what you, one of your suggestions. Did all my gen eds at a community college, and then went on to a state school. Still managed to do student loans, but I took 6 years to do a 4-year program, so I was doing it kind of part-time. But it just seems like college costs have gone through the roof.
Oh, up more than 500% since 1985. So absolutely, it's quite astronomical. And there are a lot of people who say, oh, it's government, or it's not government that's to blame, it's the private sector. It's some form of capitalism that's to blame for higher ed costs going up. But it's the exact opposite. It really is government that has precipitated the crisis that we're now in. And I agree with those who say that we have a student loan crisis and a higher education crisis in America today when it comes to costs. There's no doubt in my mind, we're at $1.6 trillion. The only form of consumer debt higher than that is mortgage debt.
Oh, God.
And not only that, but and we'll talk about this more, when the federal government nationalized loans in 2010, student loans, that number of $1.6 trillion that's double where it was at 2010.
Wow.
So we've doubled student loan debt in just the last decade. And a big reason for this is because of the government policies that have been providing all this, the student loans and the nationalization of the debt programs, and there's just so much there to talk about.
And didn't they kind of sneak that into the Affordable Care Act?
Yeah, it was sort of an addendum to Obamacare.
Which I'm like, how does that have any relation?
There was the Affordable Care Act that was passed in 2010, so Obamacare, and then shortly thereafter, and I forget the name of it, but there was legislation that was approved in Congress that was sort of an addendum. It was some reconciliation act dealing with health. I think it was the Health Care and Higher Education Reconciliation Act. And one of the things that they did was make student loan interest payments one of the funding mechanisms for Obamacare. That's part of what they did there. And in the process of doing that, they also essentially took over the student loan system. Now, it is possible to get student loans in the private sector, but most loans are being held through the federal government, and it is now the single largest item on the federal balance sheet, student loan debt.
Wow, that's crazy. Yeah, that's kind of counterintuitive to, seems like where you would think we should be going. It seems like privatizing student loans.
Well, I would certainly think so, yes.
So, the government taking over student loans, why is that driven up costs?
Well, it really traces back to the 1970s. So it's not just about how student loan debt was or student loans were nationalized in 2010 or in 2007 when under George W. Bush with the Democrat-controlled House of Representatives and so forth, they went ahead and basically guaranteed all loans, student loans, with the federal government. So that was the start. Bush started it. Then Obama really piled on, although it does trace back to the 1970s when they started really picking up the student loan system and saying, okay, let's have more and more of these loans get out there as a way to help pay for college. But the biggest thing that traces back to the 70s but was really codified in 2005 was this idea of bankruptcy protection being virtually eliminated. Now, it's still possible. There are ways to get rid of your student loan debt, discharge that in bankruptcy. But for the most part, if you are deeply in debt, it is virtually impossible, unless you have the right people working for you, and even then it's challenging, to be able to get your student loan debt included in a discharge in bankruptcy. Whereas all other forms of consumer debt, virtually, you can discharge. This began in the 1970s, and in 2005 it was basically codified and now virtually impossible to do it. The biggest reason why this helps to exacerbate the cost of college is because there's no risk to the lender. That is to say, if you're not worried about the prospect of bankruptcy discharge, then why not just give out a loan to somebody, because there's going to be no consequences.
Right.
In fact, some research even suggests that the federal government makes more money on defaults of student loan debt than it does on you actually paying it back. It's just an interesting little phenomenon. It's, I'm not too well versed in how the mechanics of that work, but what I've seen has been pretty fascinating. But what I'll just say is that when it comes to the higher ed costs and the role of bankruptcy discharge being virtually eliminated or virtually impossible over time, if there's no risk to the lender, of course, they're going to give out the loans. And then the colleges and universities, they get paid up front before you start going to school. And there are no consequences to them if you do default on your debt. So that means they'll just keep accepting the money that comes through loans, grants, Pell Grants, for example, whatever, and they will continue to raise costs. In fact, the New York Federal Reserve Bank in 2015 did a study and found that for every dollar that is given out in subsidized loans, unsubsidized loans, Pell Grants, what have you, from particularly the federal government, there is an increase in tuition averaging about 60 cents on the dollar.
So more tuition, more student loans, more grants equals higher costs.
Yeah.
And is it because of the supply and demand thing that everyone knows that they can get the easy money, that so people that maybe weren't going to go to college are now going to college, and so there is so many students coming in that colleges are like, yeah, we can charge whatever we want?
Yeah, though it very much is the case. Absolutely, great point, Annette. When it comes to higher ed costs, it's a lot like healthcare, third-party payers. When somebody else is doing the paying, or it seems like somebody else is doing the paying, you're not going to be so sensitive to that price, and you're going to continue to use that service as often as you feel is necessary. So you're not going to face.
So why not go back and get your master's or whatever? Like, you can't find a job after your bachelor's. Well, maybe I'll go back and get some more student
you're
loans.
18 years old. You take out however much student loan debt you need to. You're not paying that bill yet, not until you graduate. And the loan's going to be given out because there's no incentive not to give out the loans.
Right.
Not likely that you're going to be denied a student loan application that you put in to be able to get that financial aid. And so then the money just keeps flowing to these higher ed institutions. In fact, in 1987, I think, Bill Bennett, then Secretary of Education under Ronald Reagan, pointed out in 1987 or thereabouts that because of all the grant money and student loan money that's being given out, colleges are blithely able to raise their tuition without any concerns. And his point has been known as the Bennett hypothesis, and it truly has borne out.
Bennett hypothesis from 87.
Yeah. Yeah.
I guess nobody really.
And it was nothing but 2004. Student loan debt was about $345 billion. 2007, I think that number about doubled. And then in 2010, it was about $800 billion when Obama nationalized the student loan system effectively. Now we're at $1.6 trillion. That number has doubled.
Just since 2010.
Just in a decade. And that's particularly because when the federal government is giving out more and more loans, and not just guaranteeing loans, then there's even more incentive to keep giving them out.
Well, and I'm guessing that doesn't mean that there's twice as many people going to college.
No, the number has gone up.
Right.
But not like double, triple, quadruple.
So it's not like, oh, well, we're educating so many more people.
But at the same time, there has been an increase in the number overall. I mean, it's not always consistent. There have been some ebbs and flows. But by and large, it is higher. And that's part of the problem, is that if you have, going to your supply and demand point, if you have basically a stagnant supply of colleges and universities, you don't have all sorts of new ones that are popping up to meet the supply and what have you, particularly because of accreditation issues, which we will talk about, then you have more demand, so to meet the demand, not to meet the supply. And then you have more demand from students because they're able to take out more and more loans from the federal government, maybe get grants, what have you. The supply and demand curve then means that the price will go up because supply remains the same, and then demand is going up. So prices have to increase, or at least theoretically, particularly because the colleges and universities have no worry about jacking up the price.
They're sitting pretty right now. They can do pretty much whatever they want.
Yeah.
Which is not a good place for us as consumers.
No.
Especially when I have 3 children at home right now. Oldest is 11. And so the clock is already ticking. I'm thinking, what is it going to cost me to send my girls to school?
Yeah.
You know, 7 years from now. Because it's so terrible now. Is it going to keep getting worse? I am indoctrinating them right now to go to BYU because we're members of the Church of Jesus Christ of Latter-day Saints, but our schools are subsidized because we pay tithing. And so I'm always telling them, you want to go to one of the BYUs, don't you, right? Either Provo, Idaho, Hawaii. Go to one of those colleges because I know that their costs are contained. They're like completely separate than the systems that we're talking about. But, you know, there's always a really good chance one of my girls is going to say, no, thanks, Mom. I want to go to this state university or this other university because it's much better or just because I want to rebel or whatever. And so I'm always thinking, what alternative plans can I have besides, you know, the current situation?
Well, I don't think that we're likely to see anything major happen as far as alternatives unless significant change is done in the federal government with the way student loans are done, higher education is funded altogether. And by the way, that does not mean just providing free college. There really is no way to meet all the goodie bags that are being tossed out there. Free college, forgiveness of student loan debt, Medicare for all the aspects of a Green New Deal. There really is no way to finance that for starters, but also it's not the role of government. I mean, the federal government in the Constitution of the United States, I know you'd like to talk about the Constitution, and thank you for that. The Constitution doesn't authorize the federal government to just say, yeah, let's go finance the entirety of your higher education. And you know what that would result into? A worse crisis than we're facing now. Because then there's all the more reason for colleges and universities that are getting this money direct from the government to keep raising their prices. That's what would happen under any of these sort of socialistic type of systems that are being proposed.
Yeah, and then because then everyone and their dog can go. And so, of course, why on earth would they try to contain costs at all? And the quality of education, it's not getting any better. It's not like, you know, all this money. Oh, I get so much more for my money. It's not the case. So part of it is the supply and demand issue. You also said accreditation. So what's the issue that I read the paper? I did not know that accreditation was done in part by the actual colleges that are being overseen.
I think there are 6 regions that have accreditation oversight. And basically, it is member colleges and universities that constitute those agencies that determine if new ones get to be accredited. But they also use input metrics, not output metrics. In other words, they're looking at, okay, do you meet these particular basic standards to get in? But what are your outcomes? Are your students performing well? Are they getting jobs out of college? There is no basis in the current structure for accreditation, which is basically accreditation, by the way, means that that's your ability as a higher ed institution to say we're accredited and we can accept federal student loan payments.
Because if you don't receive accreditation, you're not getting the money.
And so, in essence, if you are part of these existing organizations, you might not want to let others in. Because it's your exclusive club, and do you want them to be voting members and helping to determine any changes in criteria or anything? Exactly. It's like a monopoly. You don't want to add in additional competition into those structures and systems if you can avoid it. If you had more competition, that might help to hold down costs too. So one of the proposals, interestingly enough, Senator Michael Bennet of Colorado and Senator Marco Rubio of Florida in 2015 put forward a proposal that would provide a second pathway for accreditation that would be based on output metrics. But there are a lot of colleges that are accredited right now who shouldn't be because their graduation rates are very, very poor. I saw
some of those schools you mentioned, University, Texas Southern, and
you got the paper right here, which, by the way, you can read at the millennialpolicycenter.org website.
And it's easy reading. You know, sometimes policy papers are kind of hard to get through, but this is well written.
Well, thank you.
Easy to understand.
I highlighted the list too, so somewhere here. Okay, here we go. So I don't remember how dated. This might be a few years old, this data, because this paper was published.
Can you tell me what happened to the bill that Bennett...
it hasn't gone anywhere. Like, I don't know how many sponsors have gone on board, but it wasn't passed. At least at this point. But it's definitely something that should be... It's a rare, in my view, right-on position for Senator Bennett. to take on and say, hey,
I know, it's kind of
basically
surprising.
the idea of the accreditation pathway and having a second pathway is that it provides another way for institutions to get accredited, be able to be a part of this competitive environment, and also to use better standards, that is, output metrics. So, for example, many universities, reading from the paper here, which is Restoring Higher Education in America, have horrendous graduation rates, yet federal dollars continue to make their way to schools that graduate less than a quarter of their students in 6 years. These include the University of District of Columbia, 7.7% graduation rate, Louisiana State University, Alexandria, 11.1%, Texas Southern University, 13.3%, and Chicago State University, 13.9%. And not only that, 2009, so 11 years ago, but still the data more recently is similar. 29% of students who took out loans dropped out of school.
So they get nothing, and they're still going to pay those loans.
Yeah, well, and here's the thing, too. There is one thing that a lot of folks who would like big government solutions identify as a problem that is a genuine problem. Minority groups in America are those that tend to drop out of college more often and have student loan debt that they still have to pay back.
Right.
And that is because of the perverse way in which the system has been structured altogether. And now, especially if you're on lower income, you have no choice but to take out more loans. And not only that, but we've been seeing, as you've gotten an increase in Pell Grants, for example, that there's actually been less of a focus in providing grants and support to people who are need-based and more so focused on merit-based. And that's valuable and important in a lot of ways, but it also makes it more difficult if you are looking for aid for people on the lower end of the economic spectrum to get access to those loan programs. But some will say, again, hey, let's go ahead and nationalize the higher ed funding system, make sure that everything is just paid for by the government. That would raise prices even more, that wouldn't, or at least costs, it wouldn't address the real problems that are going on. You cannot divorce something that you think is valuable from economic reality.
Yes.
Just because healthcare is good to provide to people, just because higher education is good for society, doesn't mean that economics don't apply. Supply and demand, market factors always apply. In every circumstance, there's always going to be a cap on the number of students that can attend a university at any given time. And so especially if we provided free college, so to speak, tuition subsidized by the federal government, then more and more people would just say, let's go ahead and go to college. And they're not increasing the supply, especially if they don't address accreditation issues, for example. And that means that there is more competition for students to get into even basic public colleges and universities. And then more will be priced out of the system in a sense because they'll have to be selective.
And bigger class sizes, and
if they do increase
all
the
sorts of
numbers of
things
students
that
that they bring in,
you could water down the education you get, or you're not getting in.
So accreditation is one important way to address this, because what that would do is bring some more competitive aspects into the system. So
I thought it was funny that one of your ideas was, let's get rid of accreditation altogether, and then you said obviously that won't happen.
Yeah, thank you for bringing that up.
But it'd be kind of cool. The
libertarians who are watching would probably say, well, why are you keeping accreditation? Thanks for bringing that up. I absolutely would disown the idea of accreditation. I would get rid of that, at least government run and government involvement. I mean, this monopoly is sponsored basically by the U.S. federal government.
Right.
And so I would get rid of that and allow for other market-based institutions to make those determinations. That's not going to happen, at least not now. So at least if we have a second alternative pathway, we can get there. I also think we need to consolidate the student loan system. I mean, there are multiple programs available. You have to figure out which one is best for you and how to make this work. So I don't want to get into the details of how I would put the monetary amounts that you can get and so forth, though I have specifics on the paper. But I would consolidate the subsidized and unsubsidized student loan system just for a general student loan program for undergrads. There is the Parent Plus loans that post-secondary people who are going to law school or medical school, they can take out those loans, or parents can take them for undergrads to help their kids. I would consolidate that and adjust how that's operated as well. And then the Pell Grant system. I mean, I understand the value that folks look at this program of Pell Grants and helping provide funding to those who are the most disenfranchised financially, if you will, and what have you. And they want to help them to get into higher education. But the problem is that the way the Pell Grant system is structured is very much flawed. And so I would switch it to a voucher program and then let it follow the student wherever they go and add some competitive
So like you
aspects
get
there
X
as well.
amount of dollars and you take it wherever you want to go to school instead of I'll
Yes.
just give it directly to the school.
Yes, the schools get it based on enrollment numbers, if I recall correctly, that are in certain socioeconomic groups, but it goes to the school directly and not from you, the student, when you decide you want to go to a particular institution. And again, going back to that 2015 Federal Reserve study, Federal Reserve Bank of New York, they found that Pell Grants actually increase the cost of college. I think it's 55 cents for every dollar.
Just like the student loans.
In Pell Grants that comes
So there's
in.
got to be a way to fix the supply and demand, basically. We need a higher demand, a higher supply.
That would be one aspect if you, through accreditation, for example, allowed more institutions to get in more easily and used output metrics to make sure that they're actually doing what they're supposed to do, that college graduates are finding jobs after college and so forth. So I think there's a lot there to keep in mind. Also, the bankruptcy protection aspect. So when it comes to student loans and those who are deeply indebted and on the verge of default because they can't discharge it in bankruptcy, or because it's virtually impossible to do so, restoring that isn't just going to allow an out for those who are on the verge of default. Restoring that is also going to restore risk to the lender.
Right.
So that there's an incentive to say, okay, should we go ahead and give you this loan, look at some different aspects to it, and then where are you going to school? That could be one aspect. What programs do you want to participate in?
In other words, are you going to be able to earn some money when you get out? And
are you
repay the
getting
loan?
a degree that is valuable and will be something with earning potential after you leave?
Right.
Or are you doing underwater basket weaving? I mean, there is a place.
Okay, women's studies.
There
That's
is a
one of
place.
my favorite ridiculous.
Yeah. Well, there is a place for women's studies, maybe as a minor. Ethnic studies as a minor, unless you're going to actually become a professor or do some specific research job. You're not going to get a decent job. There's a good chance you're going to be a barista at Starbucks for many years and not find another opportunity. But it's important to note that what I would do in restoring bankruptcy protection is I would also put colleges and universities on the hook. If you graduate from college and you end up having to discharge your student debt in bankruptcy, because that's a little easier to do under changed laws in accordance with my proposal, that college or university should be on the hook for a percentage of the losses. Or if you default on your student loan debt, they should be on the hook for a percentage of the losses. Because then what that means is they're going to guide students better towards degrees that will actually earn them a living out of college. And they're going to help them to make better decisions in their life, to make sure that they are performing well academically and so forth. And then also using better standards as far as admitting people into these colleges and universities
so we have a lower dropout rate as well.
So you add risk to the lender, largely the federal government, at least as of now, and then you also add risk or skin in the game to the higher ed institutions, so they have to be smarter all around. Then you can still have financial aid programs and so forth, but if you adjust how the aid is given, whether it's loans or grants, and you focus in on some structural changes, then you can help to bring down the costs. Now, I would also allow existing borrowers who are deeply in debt to discharge that debt in bankruptcy more easily than is currently allowed, but you couldn't ex post facto go back to the whatever school. I went to Regis University. If I have no intention of going bankrupt with student loan debt or what have you, but if I were to, hypothetically, you couldn't say, oh, Jimmy graduated in 2011 and now he's just charging debt in bankruptcy, and that wasn't allowed at the time that he went to school. Therefore, that school should be on the hook. You can't say that.
Right,
But you
right.
can for future borrowers or borrowers for next year or what have you.
No, I like it. I like anything that makes the schools a little bit more accountable.
Exactly.
It really does feel like they just can do whatever they want.
Yeah.
And they have a blank check. I like some of your other ideas as far as encouraging community college. Like I mentioned, I don't know if it was before or after we started recording.
Yeah.
But I went to community college for 3 years.
Yeah,
and I
you
did
mentioned that,
all of my general education credits out of the way. And then,
Yeah, my father did that too. He did 2 years community college and then 2 years of college in upstate New York.
and also, a lot of high schools here allow seniors to start getting college credits while they're in high school.
Yeah, both from AP programs or, IB, and you can even participate in some of the community college offerings and so forth. For me, I went to Regis University 2008. I graduated in 2011. I took a few summer courses, but I'd come in with, I think, 18 credit hours, which is just
Oh,
over
wow.
a semester.
Wow, that's really good.
And then I, piled up to do 18 credits, a couple of different semesters or however it was, along with some summer courses and a summer internship in order to make it more possible. So I also went to Regis University, and my parents helped me out with what they could. I also got the maximum amount that I could get for some support from a scholarship from Regis, and then I took out loans for the balance, and hence why I'm still paying off some of that debt. But I was able to make it feasible for me to go there. We need to make it feasible for more students to go to college and have a pathway, and that includes community college, trade schools. In fact, one thing that I would open for accreditation, I would open up accreditation possibilities to trade schools, so you can get federal student loans to go to a trade school as opposed to just to a 4-year college.
Yeah, I like that idea because we've been indoctrinated, I don't know for how long now, that everyone needs to graduate high school and go right to college. Well, that's not really the case. There are a lot of people that's not really where they belong. And if they want to go and be a plumber or a carpenter, why do they need a 4-year degree for that?
Right.
They don't. They probably need trade school or what is it, where you follow someone around for a few years and
Like shadowing, internship type of program.
I'm thinking of another.
Oh, apprenticeship.
Yes, an apprenticeship.
Yeah.
There are a lot of alternatives to 4-year degrees.
Yeah.
That could cost a lot less. And I agree. Give them, if you want to give them federal help, it's probably going to cost a fraction of what it would for a 4-year, and they don't need the 4-year.
Yeah.
So alternatives are great. So awesome. So we've got some good ideas floating around here.
And as you said, the paper, we have multiple papers that I've written at millennialpolicycenter.org. And this particular paper, Restoring Higher Education in America, I had a revised version that went out in January of 2018. It is easy to follow along with. It's not excessively long, and it's about a dozen pages, and plus a lot of facts and citations to support the arguments presented. But there are a slew of ideas. There are many others that we haven't gotten into that we could easily delve into for a whole hour of conversation, going really underneath the hood. But it goes to show one thing, and I know we'll talk about a couple things, other things regarding student loan debt that can be done. But the left likes to say that there is a monopoly that they've got on higher education, for example, and student loan debt. They're the only ones who are talking about it. But that's not true. The fact of the matter is that there are plenty of other ideas that actually get to the heart of the problem. They've identified a correct issue. We have a crisis right now in higher education today from the costs and student loan debt. It needs to be addressed. The problem is they identify the wrong reasons for it. It is government that is the problem. Ronald Reagan in the 80s said, government is not the solution to our problems, government is the problem. And that is exactly the case when it comes to higher education and student loans. Again, 2010, student loan debt was at $800 billion. Obama essentially nationalizes the student loan system. A decade later, it has doubled, and it is again the single largest item on the federal balance sheet today, student loan debt.
And yet, typically, you have these politicians that are running for president right now who want to go ahead and say, let's double down and pay for all of it. That's so typical of government. Let's take something that's wrong and fix it the same way we've been fixing it to get it to this point where it is right now.
Double, triple, quadruple down
And
on that.
so, Yeah.
Now, on the student loan debt issue, because this one's important to me in a number of ways, and I understand that it is important to a whole swath of mostly millennials and Gen Xers today. Although, interestingly enough, the largest group that is defaulting on their student loan debt is not millennials. It is 40 to 49-year-olds. And that's particularly because they've taken out their own loans that they may still be paying back and loans for their kids through Parent Plus loans.
Yeah.
And then that's stuck with them. So part of the deal, I was able to, for my time at Regis University, to take out Parent Plus loans through my parents. And they said, we'll do this, but you have to prioritize paying back the Parent Plus loans that are on us after you graduate. And it's exactly what I did.
So you're paying the loans that they took out.
I already paid that off.
Oh,
I paid that off pretty quickly.
Good for you.
What I'm still paying is my own student loans.
But that was good of you to get your parents' debt out of the way
Exactly.
first. 'cause
No,
they-
I think that's a perfectly reasonable way for parents to go about it.
Yes.
I will help you. We'll even take out loans, but you prioritize this
Yeah.
and make a point of ensuring that they do it.
Right.
So,
You have some great ideas. There are a couple of bills as far as helping to repay student loan, because some of us are sitting out here with student loans saying,
Yeah.
"Oh, it's nice to think about lowering college education, but I'm done. What can I do with the debt that I have now?" And so,
yeah, if you're working today, you can get $5,250 in support payments, tax-free from your employer every year.
to go to college.
To actually go to college. So if you're working, your employer can give you a tax-free benefit of $5,250 a year. Doesn't happen for student loan debt right now. So there is legislation in Congress that looks like it's on the path. It's got enough co-sponsors in the House and almost enough in the Senate. At the
Is
federal
this-
level, it's the Employer Participation in Repayment Act.
the
So I'm
EPR.
starting here with the bill that has been put forward, for example, by Representative Rodney Davis of Illinois. He's one of the leading advocates for this legislation. There are others that have been putting forward this idea or co-sponsoring on this bill. And what this would do is basically say an employer who's got an employee who's got student loan debt that they're trying to pay back can each year provide a benefit of up to $5,250 tax-free to their employee. This is not a handout because you actually have to work in order to do it. Your employer has to actually say, yes, I will do this. And of course, the federal government has to say, yes, it's tax exempt. Right now, there are employers who are providing benefits to their employees for student loan payments, but smaller businesses especially aren't really able to do it because then they have to pay taxes on it as regular compensation. Now, one might say, I think appropriately, that this could cut into take-home pay that you would otherwise get. There are a lot of millennials who are actually looking for employers who are saying, yeah, you'll get your base pay, but we'll also help pay back your student loan debt. They're specifically looking out for this. And so this bill's making some real headway, and it's one of a few ideas in Congress right now to actually engage employers in helping their employees pay back their debt.
And it's funny because when I first read the idea behind it, I thought, why would employers want to do this? I've never even heard of this before. And then I read through it and I thought, this makes perfect sense, especially in a place like Colorado where unemployment's very low. And so there's a lot of competition between employers.
Well, wages are finally rising already in the last few years, which has been very encouraging, to be sure. So in my most recent paper on student loan debt, easing the burden of student loan repayment, we talk about the Employer Participation in Repayment Act is one bill before Congress. There's also a great piece of legislation that U.S. Senator Cory Gardner of Colorado put forward in late 2018. And what this bill would do is something very similar but different in terms of the structure. So the similarity is that it would involve employers in a tax-free way providing support for their employees and paying back their debt. But what Gardner would do is enable an employer, so business could set up an account where they and their employee could put up to $10,000 each year. So almost
Together,
almost
10,000.
double what the employer can do under the Employer Participation Repayment Act. Well, Gardner's Student Loan Repayment Acceleration Act would make that number 10,000, and it would be between, as you pointed out, between the employer and the employee. The employer could first determine, do I want to do this? Second, how much do I want to pay into the account? And how much do I want my employee to be able to pay into the account? Could be 50-50, could be 60-40, 40-60, whatever.
But it's all with no tax consequences.
Right, it's a tax-free benefit.
I
Kind of
really-
like a 401k, right?
Right. I actually liked that second one better just because it applies to self-employed individuals.
Yes, so there also is an above-the-line deduction. That is to say, where you could basically just right off the top take off $10,000 if off of your tax bill, basically, if you are a student loan borrower who's paying back and you are self-employed. So that means that there are two ways to go about it. I agree with you. I like the idea that if you're self-employed, you're not denied some sort of a benefit.
Because, well, like you mentioned in the paper, a lot of millennials and, frankly, older people like myself are really into the gig economy, like you mentioned.
Exactly.
Because so many of us are like, I don't want to do a 40-hour week, 9 to 5. Maybe I want a contract and I want to take this job over here and this job over there. And we want the same benefit that the other one, the first one you mentioned. But you said the first one is on a path right now to
Yeah, it seems like it. I mean, it has enough support, like at least 220 co-sponsors in the House, enough to get through. It just needs to be attached to some other bill.
Yeah, why is that?
The annoying thing in Congress is that it's all give and take. What bill can this be on, and what bill will they allow it to be on, and what have you. Colorado, here where we are, it's single legislation. So you cannot have a student loan bill that includes healthcare components unless it's the budget.
Right.
You cannot have two issues that are commingled that aren't similar. In Congress, that's basically how they do business.
I know, I hate that.
Which means that you have more pork barrel, you have more give and take trading, lobbyists getting involved in trying to determine what things are allowed in, what things aren't. So the Higher Education Reauthorization Act or tax legislation, I mean, these are things where either of these bills could theoretically be attached. So there are enough co-sponsors in the basic bill for the Employer Participation in Repayment Act, that's the 5251. And then on the Senate side, they have, I think, just almost the number of co-sponsors that they would need, which would be 60, in order to get this through.
Oh, we really need this. I think this would be huge.
Yeah, well, I do, and I do too. And I think the biggest reason for it is that it's a way in which to go about it that's not some massive government scheme. Okay, it involves the government giving some sort of tax carve-out. But it's a sensible approach as opposed to one that makes no sense, that would be astronomical in cost, that would also get rid of any personal responsibility components such as forgiveness. In this case, you have to work in order to get the benefit. Even if you do the above-the-line deduction, you're self-employed, you're still self-employed.
Right.
So it's not just a handout from the government, it's actually saying, okay, you got your degree and now you're working, let's help you out, or provide an opportunity for an employer to do that.
And you're still paying it.
Oh, yeah.
You're just getting a tax break on it.
That's right.
It's just making it a little bit easier to make those payments.
Exactly. So in other words, the bottom line is there are a lot of ideas out there that are much more free market based, not massive big government schemes that can address both the cost of college and the crisis there and the student loan debt. For example, restructuring the way the student loan system is done in terms of the programs like how Parent Plus loans are structured and individual loans for undergrads, taking the Pell Grant and making that a Pell voucher program. Going ahead and reforming accreditation, as we talked about, restoring bankruptcy protection, which is a twofer, giving those deeply, deeply in debt a way out, and also restoring risk to the lender and putting higher educational skin in the game for those colleges and universities that are teaching students, and then also dealing with student loan debt that's existing through programs like what Senator Gardner has put forward or Representative Davis. And again, at millennialpolicycenter.org on our Issues and Ideas page, which you can get to right on the top menu, you go to the one that says Restoring Higher Education in America, and all these papers are there. We've got several videos, some commentaries, some entertaining ones. You mentioned The Walking Debt before, which is all about bankruptcy protection. By the way, the bankruptcy protection legislation in Congress that has dealt with this has been sponsored primarily by Democrats. And also, Elizabeth Warren is a past co-sponsor of proposals to restore bankruptcy protection and have higher education skin in the game. So there are bipartisan ways to go about it. Instead, they're focusing on the big forgiveness ideas or free college. Even Warren understands there are other ways to go about it.
Yeah, isn't that funny? They forget that when they're on the campaign
Yes,
trail. Yeah.
of course, of course.
So I will link to this website.
Thank you.
In my show notes. And if anyone wants to reach you with questions or anything, can they email you on this website?
Yeah. The millennialpolicycenter.org website has a contact page, or Jimmy at millennialpolicycenter.org. You can email me. Happy to take questions, have conversations about any of this stuff. I think there's a lot out there, and people just aren't talking about it. I think that the ones with the monopoly, or the ones on the issue, or the ones that are proposing big government schemes, couldn't be further from the truth.
Yes.
And
I have one last question for you after this whole discussion and reading and listening to you. Are you ever going to run for office?
I don't want to run for office. Never say never, but personally I have no intentions of that. I have other sort of goals in media and the policy space and what have you, and being more of an outside voice that is informing and educating people as opposed to actually being in a legislative or executive position.
Well, I can understand that. It's kind of a dirty game.
Well, there are any number of reasons why. I would rather stick with sort of the path that I'm on as opposed to going in the elected route. But, never say never.
Okay.
You never know what might happen. But Annette, I appreciate the opportunity to talk with you and your viewers and listeners.
No problem. Well, you've done a really good job with these papers. The website's got a lot of great information. So I really encourage you all to go there, do your research. You need to be educated about these things, especially as the presidential campaign comes up. And especially as a lot of millennials are not really researching and thinking through these issues, and they're just kind of...
Well, they're not even aware.
Yeah.
That's the thing. Going to the monopoly point, they're not aware that there are other ideas out there, and that's exactly why I and the Millennial Policy Center have really taken on this issue as one of the key subjects. We've also taken on the environment, providing free market solutions to environmental issues like climate change and a whole slew of other topics.
Then I think you need to come back on again sometime.
That would be great.
So go to the millennialpolicycenter.org, do some looking around, reading. You need to educate yourself. Don't just buy into socialism. There's so many better ways. And you can find this podcast again at AnnetteTalks.com, iTunes, Stitcher, Spotify, YouTube, yada, yada, yada. Please subscribe, listen. You can reach out to me. You can send me an email at AnnetteTalks.com, make comments on the website or on YouTube or on Facebook at Facebook Annette Talks. Thanks again, Jimmy.
Thank you.
And thank you all for listening to Annette on Life, Liberty, and Happiness.